Hey everybody, Camari here with another edition of I Love Investments. Actually, this is episode number 5. That's right, we're 5 strong. So we're going to keep moving, answering questions, and give you my thoughts and opinions on the market. And today's episode is about mutual funds. In particular, answering a question about mutual funds from Ms. Quandra Brown. Quandra asked, what are some of the pros and cons about mutual funds? So I had actually done a video about mutual funds previously in the Investing Basics series. I'll post it here so you can click on the link and watch that video just to get a bigger overview of investments. But before I jump into Quandra's, question and answer rather, I just want to give you what the actual definition of mutual funds is. A mutual fund is a collection of investment money pooled from many investors to be invested for a specific objective. Basically, that means it's a bunch of people that come together, they invest money, and it's supposed to be invested for a particular objective. Now, going forward, when you invest in a mutual fund, you buy shares and you become a shareholder of the fund. So if you buy into a mutual fund like a Vanguard or an American Funds or somewhere like that, a Fidelity, you're buying into their funds. So you're becoming a shareholder in their funds, not in the actual overall company, but into the actual fund itself. Each one of the funds has a portfolio manager, a fund manager, and they pick what securities they're going to buy within that particular fund. Now, some of the pros and cons of mutual funds, I'll just give them to you right now, is easy diversification, you get professional money management, and then you get some specialty also. Some of the cons are taxes. Taxes in mutual funds can be a little bit squirrely. The uncertainty of investments and fees. Now, just going through this a little bit deeper, easy diversification. So when you're buying a mutual fund, you're usually getting a basket of stocks or a basket of bonds. You're not just going to have like one share of Coca-Cola or IBM or GM or something like that. You're going to get a wide basket. Number two, professional money management, again, is another pro. So you have guys like myself who sit around all day long and look at the stock market or the bond market or investment markets and see where are some of the best opportunities for you to invest your funds, in particular into invest into this particular fund that meets its objective. So, you get people, professionals who this is all they do all day long. The last pro for this is specialty. So in mutual funds, you'll find people who only invest in, let's say, China. So for example, there's a fund in China. There's a China fund and invests only in China, and I really like that fund. There's other funds that may only invest in trees or may invest in water or only something specialized. Or, they could just invest in overall stocks or overall bonds, but there's still a specialty to that. All right. Some of the cons. Now, this is the fun part. All right. Taxes. Now, if you buy into a mutual fund in December and, there's another fund owner who brought in say January, and the portfolio manager decides to sell off some of the shares that they bought earlier in the year, the guy who brought in December has to pay taxes on all that gain, if there was a gain. He may get some of the loss too, but he has to pay tax on that. And guess what? He also has to pay tax on the dividends. So the pooling structure and the way that the mutual funds work doesn't always work the best for individual investors who are investing money outside of their retirement accounts. So that part can be a little bit squirrely. You definitely want to read the fine print on that. Uncertainty of investment area is a lot of times you don't know where the investment managers are investing their money. Transparency isn't super high. So they usually let folks know every quarter. Now, there are some legitimate reasons for not letting folks know what you're investing in. One is if you let the whole market know what you're investing in, you'll have other people in the market trying to bid up the price on you and trying to make money off of you. So some of these bigger funds have, instituted some rules or got some rules instituted whereas they don't have to publish their holdings every day or every time they do a transaction. The last one is fees. So some of these mutual funds have high fee structures. Not all of them, but some of them have high fee structures, and, it can be very costly. So every dollar that you pay to someone else, it's a dollar that's not kept in your pocket for, your new house or retirement or whatever it may be. Now, I do believe that, us investment professionals should get paid, but it should be fair. And they should be working for your dollar, and they should be producing some kind of return for you as well. So, there again, I gave you some pros and cons. So the pros, again, easy diversification, professional money management, and you get specialty. Those are the cons. I mean, the pros. The cons are taxes, uncertainty or unclear investments, and fees. So, Quandra, I hope this answered your question. If anybody else has any other questions for me about investments, just send me a message, Twitter, Facebook, or email. Until the next time, if you have any other questions about investments, feel free to ask Camari. I'll talk to you soon. Bye-bye.